Hello, everyone. My name is Jeremy Kronemeyer. I'm the operations manager here for Wickham Financial Group. I'm filling in for Stacy Scott, who's on vacation this week. We hope you guys had a great holiday weekend for the 4th of July and enjoyed your family time. Graham, looks like it was a little bit of another exciting week last week. What's been going on?
Yeah, I think you're right. Volatility did not dissipate, right? We had consumer sentiment sank to some of the lowest depths we really haven't seen, or lowest points that we haven't seen since May of 1980. So we have tremendous pessimism out there. We also saw the U.S. equities close out their worst first half since 1970. So really just a continued flush of negativity, not just in sentiment, but in the markets. If we look at the NASDAQ, it was off about 4+%. But at the same time, we only saw, say, the S&P 500 and the Russell only off around a couple percent. We did see 7 of the 11 S&P sectors lose ground. Now, I think one thing that was really interesting last week, we really saw the 10-year Treasury, or Treasuries in general, well, let's just focus on the 10-year, really drop a lot. It was off about 21 basis points, right, to about 2.89%. Now, listen, I think we started out the week somewhere around 3.2 plus, or pretty close to that. At one point, we're over about 3.5. So we really saw interest rates come down, but we didn't see the market rally, which I think is interesting, because in the past, as we've been going through all this, if interest rates really dropped, or let's say the yield dropped, not interest rates, on the 10-year, we really saw equities rally, and ones that rallied the most were NASDAQ, and we didn't see that happen this time. The growth stocks didn't rally into the 10-year yield dropping. We did see the PCE index, that's an inflationary figure, really rise to about 4.7%. We did also get confirmation that the Eurozone, we're not alone in this inflation fight. Their inflation reached 8.6%. So again, this inflation pressure is around the world.
Okay. What are you recommending right now, maybe going through the end of the summer, into the fall for people right now?
Well, I mean, just what we've been talking to clients and different visitors, listen, stay the course, have a very diversified portfolio, have cash on the sidelines, maybe shore up your own household balance sheet a little bit. If you need income, make sure you got that set aside, at least 1 year's worth income needs. Again, those emergency funds, make those have in place. And again, don't just focus on one side of the market. Have a good diversified portfolio in growth and value, small caps, mid caps, large, international, domestic. But again, obviously, I don't want to be preaching to the choir. I think we all know these are challenging times. We're right with you on this. But we know we'll get out of it. We just need a little bit more time to see, hopefully, this top in inflation, and hopefully it's rolling over, which we do feel it is, and just maybe confirmation that we're not going to go into a deep, protracted recession. I think we can get some clarity on those two notes. I think this market could have an opportunity to build a base and rally. We just need a little bit more time to see if we can start that process. We're not quite there yet.
Sounds good. Well, thanks for the information, Graham. And again, if you want to check out these weekly wrap-ups, you can check out our website for the previously recorded ones. And we'll be doing this on each Monday going forward. Stacy will be back next week. And like I said, please check out our website for any future updates. And also, we have classes coming up. Our Retirement Planning Today class is coming up early August. So check out our website for more information on that. And we look forward to seeing you next week.
Take care.